Hello, ladies and gentlemen, business owners, and the stay-at-home lazy people. Welcome to the Mango Monkey Show, where we talk about personal finance, investing, and building wealth. "6 days from now, the JobKeeper is no more." Wait, what? Does it mean I have to start working? What? No, it doesn't. The Australian government is so nice. They are extending the JobKeeper program until next year. Here comes JobKeeper 2.0. Wait, what? What's different between version 1 and version 2.0? JobKeeper 2.0 runs from 28 September 2020 all the way until 28 March 2021. Here we go to Fiji. Oh wait, the floods are not running yet. Aussie citizens cannot even leave Australia. We are in prison. Are you a boss or business owner? From 28 September 2020, employers need to demonstrate that the actual turnover, GST turnover, has fallen compared to a comparable period. There are two main ways to work this out. Number one is the basic test. For the fortnights from 28 September 2020 until 3 January 2021, which is approximately 3 months, with the first JobKeeper payment being paid in October, even though the wages are paid in September, the turnover test period is the quarter ending 30 September 2020, and the comparison period is the quarter ending 30 September 2019. If your business is registered for GST, the easiest way to work out your turnover is to do your quarterly business activity statement, BAS, for the quarter ending 30 September 2020 and compare that with what you had for the quarter ending 30 September 2019. For the fortnights from 4th January 2021 until 28 March 2021, the turnover test period is the quarter ending 31st December 2020, and the comparison period is the quarter ending 31st December 2019. You may need to do some modifications to the GST turnover calculation compared to what's in your BAS to remove things such as input tax sales and sales not connected with Australia whatsoever. Export sales are connected to Australia, therefore they are included in the GST turnover for JobKeeper purposes. Talk to your tax agent for more information. One important change with the second version of JobKeeper is that you now need to use the same accounting method to allocate your sales, your income, as what you use for your business activity statements. So if for your BAS you use the cash basis where you only count a transaction as income when the money is received rather than when you invoice, you must use the same allocation method, the same cash basis to work out your GST turnover for JobKeeper purposes. If you change your accounting basis for your BAS during or after the start of the relevant comparison period, that is the quarter sometime back in 2019, last year, you must use the same accounting basis which you had at the start of the comparison period, that is the quarter in 2019, when you work out your eligibility. Are you confused? I was too, but now I get it. Long story short, the tax office doesn't want you to manipulate the way you do your BAS in order to make yourself eligible for JobKeeper 2.0. If you are not registered for GST, you have no BAS, so you can be a bit more creative. But you must use the same accounting basis for both test periods, that is, the quarter ending 30 September 2020 to determine the first half of your JobKeeper 2.0 eligibility and the quarter ending 31st December, again 2020, to determine the second half of your JobKeeper 2.0 eligibility. The basic test is done. Now let's talk about the alternative test. The alternative test is for all you smart and dodgy people who do not want to take no for an answer. It is for you who want to get JobKeeper 2.0 through whatever means necessary. I will not go into too much detail of the alternative test. It suffices to say that the alternative test is similar to the alternative test in the original version of JobKeeper. The main difference is that it must be applied on the basis that the turnover test period is a quarter. Remember, the original JobKeeper allowed you to choose a monthly test period. Wait, I'm not a boss yet. Can I start a new company? Nope. As of the 1st of March 2020, you must have been carrying on a business in Australia. You also must have lodged on or before 12 March 2020 at least one of a 2018 to 2019 income tax return showing you had an amount included in your assessable income in relation to carrying on a business, which can be as little as $1, or an activity statement or GST return for any tax period that started after 1 July 2018 and ended before 12 March 2020, showing you made a taxable GST-free or input tax sale. There is a discretion on this 12 March 2020 deadline, but if you are a bit dodgy, you probably will not get it. Hang on, I'm just an employee. How much do I get from JobKeeper 2.0? You will get anywhere between $650 to $1,200 per fortnight, depending on which fortnights and how many hours you work during the period. You will get a higher rate if you work at least 80 hours during the reference period, which is approximately 1 month. In other words, if you work 80 hours per month. Wait a second, how does the tax office determine how many hours I work? I took some days off, or my shifts are different every week. Firstly, good news. If you were sick but you got paid sick leave, or you took a holiday and got paid annual leave, or if you got paid public holiday leave, you can still count those. Bad news is if you are a casual employee or your shifts are actually random, you do not get those paid entitlements, so you need to look at the reference period. The reference period is, for employees, the 28 days finishing on the last day of the last pay period that ended before either the 1st March 2020 or the 1st of July 2020. You get to choose irrespective of the JobKeeper fortnight being considered. Take note that this period is based on the pay cycle. For example, if your employer pays weekly every Friday, the payment may be for the work done during the 7 days ending on the Wednesday which just passed. Therefore, if this is the case, your reference period is the 28 days ending on the Wednesday immediately before either the 1st of March 2020 or the 1st of July 2020. If your pay cycle is monthly, you need to do a pro rata calculation as outlined on the tax office website. Now for the self-employed, the business owner, the reference period is the month of February 2020, which has 29 days. You can choose an alternative reference period if you do not like the standard reference period and you had genuine reasons why this month, February, is not representative of your typical number of hours of work. For example, you are sick or injured. If you are an employee, your alternative reference period must be a 28-day period ending before the 1st of March 2020 or the 1st of July 2020, which aligns with your pay cycle, like in the standard reference period explained before. If you are a business owner, your alternative reference period must be a 29-day period, which must all be within 1 calendar month and must end before 1st of March 2020. So it can be from 1st of January 2020 until 29th January 2020, or from the 2nd to the 30th, but it cannot be from the 4th January until the 1st February because you are crossing to a different month. That's a long and complicated explanation. I think I'm ready to sleep now. If you found this video helpful, don't forget to smash that like button to help with the YouTube algorithm. Subscribe to my channel if you would like to be notified of more personal finance videos like this one.